Hi everyone. Today we are going to discuss about the cash flow statement. So first question, it should arise in our mind, why we prepare the cash flow statement. So we prepare the cash flow statement all before, I'm assuming that before the cash flow statement, you are aware about the income statement or profit loss account and financial position or balance sheet. Okay. So in accounting, we follow accrual basis of accounting. In income statement, what we get to know, how much company revenue is there, how much company expenses is there, and during the year or during the period, how much company is earning the profit. Why still we require the cash flow statement? You know the profit. In balance sheet, you'll get about the company. Actually, net worth, we can say in a historical cost method, if we are following the historical cost, where we'll get to know how much company has the asset, how much company has the liability, and the equity. So why still we require the cash flow statement? Cash is very important component for any business. We have to aware about from where you are receiving the cash and where you are spending the cash. Always, it's if I give you the example, if you are receiving the cash from short-term business and spending it to purchase long-term asset, it's not very good. Okay. So to know about the business, from where the company is receiving the cash, where they are utilizing the cash, what methods are there, we get idea through the cash flow statement. Okay. So we are going to discuss about it. A cash flow statement is very simple statement where we will get idea from where cash is coming and where cash is where outflow is happening. So a statement which give us the idea cash from where we are receiving the cash and where we are paying the cash, that is nothing else the cash flow statement. Okay. Now, the same thing which I have already discussed with you, it's written here, how we are preparing the cash flow statement. So when we are following the IFRS, it means IS 7 or India 7, which is equivalent to the IFRS, we prepare our cash flow statement. So cash flow statement is a financial statement that outline all cash inflows and outflow during specific period. Period means either it could be 1 month, 2 month, 3 month, 1 year, 6 month, anything. But when we talk about the point in time, we prepare the financial statement according to the point in time. It means the balance sheet. So purpose provide aggregate data of cash inflow and outflow from ongoing operation and external investment source. Its importance is help investor and shareholder understand company financial health. Okay. Now, cash flow statement has been divided into three categories. One is operating, investing, and financing. Okay, we'll go one by one. When we, so I always suggest go always with the name. In the name, the meaning is always behind it. Okay, operating means, can we say operation? So any cash flow statement, what do you understand the operating activity? So main business related, main source of income related. Like if I give you my example, my main source of income is through the teaching income. So my main source of income should be operating activity from the fee of the students, what I'm receiving it. Okay. So operation, main source of business, what you are receiving, that is operating activity. Let's take another example. If you are selling the clothes in the clothing business, the main source of business would be sell of the cloth. So operation, all business related, it will come under operating activity. Now, what's come under investing? So whenever investing means investment kind of something. If I give an example for a personal basis, let's not, I'm not going into the company. In a personal basis, if a person purchase a house, we say, okay, wow, the person has own house. It means own asset. Okay, can we say it's a different kind of investment? Okay, if a person buy the gold, it's a different kind of investment, correct? Now, so this is when a person is buying the asset, we say it's a kind of investment. Same with the business. If a company buy property, plant, and equipment, it's come under the category of cash flow investing activity or the long-term investment. Long-term means non-current. It means the investment which you have bought, you are going to use more than a year. That is long-term investing. So it will fall in the category of investing activity. Now, what comes under financing activity? So finance means money. From where the company receive the money? Only two source of finance, long-term company receive the money. Okay, one is from their shareholder, the other is through the borrowing. So all related things means if you are borrowing the money, cash will come to the company and cash will increase. If you are paying the interest, if we are paying the principal, then cash will go out, come under financing activity. If shareholder is giving money to the company, cash will come to the company and financing activity. If company is doing well and paying dividend to the shareholder, financing activity. So I think so you have understood what's come under cash flow statement under operating activity, investing and financing. Now, in operating activity, we can prepare according to two methods, direct and indirect. Whereas investing and financing, only one method applied. So there is no change. Whereas operating activity, we can prepare according to two method that we say direct and indirect method. Firstly, we'll go through the what come under the operating investing, then we'll go direct and indirect method. So operating activity means principal revenue generating activities involve cash receipt and cash payment from core business of operation. Investing activity, sales and purchase of fixed asset, non-current investment reflect cash inflow related to investment during the term of the asset. Financing activity results in change in size and composition, capital and borrowing. Okay. Include cash from issuing or repurchase of the borrowing. Okay, or repaying the debt. So comes under financing activity. Now, as we have discussed, the operating activity we can prepare according to two methods, direct method and indirect method. So what's come under direct method? Direct touching nose, I generally say direct method. And behind the head, if you're touching the nose, it's very difficult. Indirect method not happening before me. Okay. So generally, whereas as a company, indirect method, it's prevail means it's allowed to make financial statement, the cash flow statement according to indirect method, not a direct method. Okay, so direct method means where we get how much cash you are receiving from the customer, where you are paying the cash, whom you are paying the cash, like you are paying the salary, you are paying to the suppliers. So that comes under the direct method. So if we see, this is the indirect method and cash flow from operating activity, where we are starting with the net income and then few adjustment we are doing. Investing activity, sale of the equipment, purchase of building, purchase of equipment, which we have already discussed. Financing activity, finance means money, issue of the common stock means shares, payment of cash dividend, payment of the dividend, financing activity. Okay, let's discuss about what come under direct and indirect. So already discussed the cash flow direct method determines change in cash receipt and payment, which reported in cash flow from operations section, received from customer, payment to the creditor, salary, etc. come under this method. So if you see this example, it is example of direct method. cash flow from operating activity, cash receipt from customer, and the all payment which we are doing to the related to the business that is coming. So payment to the supplier, operating expenses, income tax, interest expenses under the operating activity. Okay, now what is indirect method? So it is mentioned here. Indirect method present a statement of cash flow beginning from net income or loss with subsequent. So what we will do, we'll start from the net income. And from where we get the net income? From income statement, you'll get the net income, which we are going to use, and few adjustment we'll do. Why we adjustment do? Because in net income, when we are getting, there is all kind of income involved. Like if you have sold the property, plant and equipment, gain or loss, what happened, whatever it's happened, there it's coming. So we do some adjustment. Why we are doing? I'm going to explain when we are discussing the practical example and related topics. Okay. So you have to remember for now only, we start from net income and then few adjustments we do, and then we find it out cash flow from operating activity. In both type financing and investing activity would be same. There is only difference in operating activity, which already we have discussed. Now what we are going to discuss, so bit brief, I have already told you. Now we are going to discuss the example where you guys have to find it out, which is operating activity, which is investing activity, which is financing activity. Okay. So let's discuss this example. During first week of XYZ company, these transaction issue 100,000 share of $5 par value common stock for 800,000 cash received. So what do you think? Which activity? Money is coming, financing, borrowed 200,000 cash bank signing 5-year note bearing 8% interest. Here also finance, money is coming, financing activity. Purchase 2 semi-trailer truck for $170,000 cash. It means they are purchasing the truck. It means investing activity, PP. Paid employee 12,000 salary and basis. So who we pay the employee? Employee we pay generally operating and operating related activity. So payment of employee salary and wages come under operating activities. Collected 20,000 cash for service performed. It is our operation related service we are doing and collecting the money. So operating activity. Okay, we are finishing here today. That's all. Thank you. Bye bye. Have a nice day.